Now the last part, the main last part, there are minor issues like differences, transitional provision, disclosures. But the main accounting issue now left is sale and lease back. This is different from the old standard. This is different from old standard. This is all together a different accounting, a complicated piece of accounting. So you will pay attention. We'll take one good example also to understand. So what do you mean by sale and lease back? The diagram is also drawn in your book. There are two parties, A and B. A sells the assets, B gives the asset on lease to A. So we will give a name to Mr. A or entity A, seller lessee. He is seller and is lessee. And we'll give a name to B, buyer lessor. He is a buyer in the first transaction and is a lessor in the second transaction. Okay, if an entity, that is in our diagram A, seller lessee, transfers an asset to another entity, that is the buyer lessor, the lease and leases that asset back from the buyer lessor. Both the seller lessee and the buyer lessor are required to account for the transfer contract and the lease as per this standard. Okay. So how will A record the transaction and how will B record the transaction? Okay. So A is selling the asset, but at the same time A is taking the asset on lease. Okay. So you can say we will have to de-recognize the asset and we'll have to recognize right of use of asset. We will assume that short-term exemption is not availed. Is it right? So you have to pass entry for de-recognition of the asset, pass entry for recognition of right of use asset. You have to also pass entry for profit made. Is it right? And we have to also check whether the sale was at fair value, more than fair value, or less than fair value. That is also possible. Sale may be more than fair value, less than fair value, equal to fair value. Why more than fair value? Why A will charge more than market value to B and why B will be willing to pay? Okay, possible. Like for example, the fair value of the asset may be 10 million, but the actual sale price may be 12 million. Okay. So normally in such transactions, what happen? If the normal lease rental will be 1 million, in this example, the lease rental will be say 1.5 million. So indirectly you are compensating the other party. He paid you something more today. You paid him back in the form of higher lease rental. The standard says no. There is some problem here. This extra 2 million that B has paid to A is nothing but an additional loan B has given to A. Is an additional loan, and this 1.5 million is actually you are paying for two things. You are paying for the lease, and one you are just simply repaying the 2 million extra that you had borrowed. Is it right? That is what you will learn in the next paragraph, but I am giving you a hint. So now you have to see whether the transaction is at fair value, below fair value, above fair value. So normally if it is below fair value, It can be like this also. It can be for 9 million. In such cases, what happens? The lease rentals are reduced. You pay me less, I'll pay you less. Okay. So now first you understand overall what you are going to do in this standard. This one diagram suggests everything, only then number crunching will involve. Only numbers. Theory will make you understand the concept, the logic, but then finally in the exam, calculations are important. So see this diagram, there is a party whom we will call seller lessee. He transfers the asset to another party whom we will call buyer lessor. Buyer lessor transfer the leased asset to seller lessee. First question we have to ask, when seller lessee transfers the asset to buyer lessor, does it meet the definition of sale as per revenue standard? Does it meet the definition of sale, revenue? Does it qualify to be called as a sale transaction? That means we will apply the revenue standard and see whether all those requirement, identification of performance obligation, etc. If all those conditions are met, then it is a sale transaction. Okay. But if it is not sale, then treatment is different. Now, if it is sale, you come to the left side. In the books of seller lessee, that is this party who is selling, you will have to derecognize the underlying asset. Derecognize the underlying asset. So, suppose a machinery is transferred, machinery account will be credited. Machinery account will be credited by the book value. Recognize the right of use asset. Right of use asset account will be debited. Okay. But there is a formula for calculating that, that is proportion of the previous carrying amount. A proportion of the previous carrying amount. When I am transferring the asset to other party, and I am also taking it on lease, the standard says you are transferring some, retaining some. You are transferring some and retaining some. So the portion that you have retained will be called right of use asset, and then it will be calculated as a proportion of my carrying amount, depending upon how much proportion we have retained. Depending upon how much proportion we have retained. Suppose the fair value of the asset is 20 lakh. Fair value of the asset is suppose 20 lakh, but the present value of the lease payment is only 10 lakh. Present value of lease payment is how much? 10 lakh. But the fair value of the asset is how much? 20 lakh. So 10 by 20 of the carrying amount we will retain as right of use asset. Okay. So this time the calculation of right of use asset will not be just simply the present value of lease payment. It will be a proportion of the carrying amount. You are not transferring the whole asset. You are transferring only a proportion, retaining a proportion. Recognize lease liability. As usual, recognize lease liability, which is your present value of future lease payment, and any difference will be transferred to profit or loss, which will represent the gain or loss on the sale of the rights transferred. This will represent the gain or loss on the sale of rights transferred. So that portion of carrying amount which we have transferred, only on that portion the gain or loss will be recognized. So gain or loss will be recognized only on the portion we have transferred. Okay. So seems to be little complicated. Once again, point number 1, derecognize the underlying asset. Recognize right of use asset as a proportion of previous carrying amount. Recognize liability also, and you recognize the gain or loss on the rights transferred. What about the buyer or the lessor? Recognize purchase of asset. Now, lessor accounting is very different from lessee's accounting. Lessor accounting is he will purchase the asset because he is a buyer, and then depending upon whether it is operating lease or finance lease, subsequent accounting will be done in the books of the lessor. Same what we discussed just last 1 hour, in the last 1 hour, same accounting. So in the books of lessor there is no complication. Purchase entry, lease entry, and the lease entry you have already learned, whether it is a finance lease or operating lease. But suppose the answer is no, it is not a sale transaction, it does not meet the requirement of sale transaction, then the lessee, seller lessee, will he de-recognize the asset now? No, because it does not amount to sale. There is no transfer of control. So therefore you will continue to recognize the asset. And secondly, whatever amount you will receive from the lessor, you treat it as a loan. You treat it like a loan because you are still holding the asset in your book. So amount received from the buyer lessor will be treated as a loan. Okay. And then you will repay the loan as usual in the form of your lease rental. What about the buyer lessor? He will not capitalize the asset now because it is not a sale, so it is not a purchase, and he will recognize the amount given to the seller lessee as a loan given. Loan given is a financial asset. So IFRS standard or the financial instrument standard will apply in both cases here. So it is like loan taken, loan given. Okay. Against the security of your asset, against the security, because the asset will be secured there, but it does not meet the sale criteria. So now we'll see the accounting in the books of both the parties, the seller and the buyer. Assessing whether the transfer of the asset is a sale, because as you have seen in the diagram, if it is sale, accounting is different. If it is not sale, the accounting is altogether different. So apply the standard revenue from contract with customer to determine whether the transfer of the asset can be accounted for as a sale of that asset. So there are some conditions given in revenue standard. Okay. Example. Identify performance obligation, identify transaction price, allocation of transaction price, okay, transfer of control. So all these condition needs to be satisfied for recognition of revenue. If it is satisfied, then you will follow this accounting which is right now appearing on the screen. Keep a pen, pencil ready. I have written some formula here. In your diagram, summary was given. Now we'll see a little detailed version. First, case 1, transfer of the asset results into sale. Okay. Case 1, transfer results into sale. Under that two cases, case 1 in the books of seller lessee, the one who is selling the asset, taking the asset on lease again, seller lessee. So what seller lessee will do? Seller lessee would, one thing we had learned there, de-recognize the underlying asset at carrying amount. But in place of that, you will recognize right of use asset. Right of use asset. Seller should measure the right of use asset. At what amount? Arising from the leaseback at the proportion of the previous carrying amount. Some portion of the previous carrying amount of that asset that relates to the right of use retained by the seller lessee. Now how do you compute it? Right of use asset, write down the formula. This formula you will write down. It is the proportion of carrying amount. Carrying amount I will take Then I will take the present value of lease payment upon fair value of the asset. So this is my ratio. Fair value of the asset is suppose 20 lakh, but the present value of lease payment is only 10 lakh. So 50% of the carrying amount will be retained in the form of right of use asset. So what they are saying is, if the fair value of the asset is 20 lakh and the present value of the lease payment is only 10 lakh, then I am retaining 50%. Is it right? I have not transferred full. I have not retained full. I have only retained portion. So the standard says take proportionate carrying amount. Take the proportion of carrying amount. As if you have not transferred the whole asset. As if you have transferred a portion of the asset. The seller lessee should recognize only the amount of any gain or loss that relates to the rights transferred to the buyer lessor. I will not calculate the gain or loss on that portion of the carrying amount that I have retained. When I have not transferred it, how will I recognize profit or loss? Okay. You will recognize the profit or loss only on that portion of the carrying amount which is transferred to the buyer lessor. So gain or loss will be recognized on this part. Is it right? That again is a formula we'll see below. First point is de-recognize the carrying amount of the asset. That is easy, whatever is carrying amount, credit, but that will be substituted by right of use asset equal to a proportion of the carrying amount. That is how much right we have retained in that asset. The right we have retained in the asset is a ratio of present value of lease payment upon fair value of the asset, which means remaining right in that asset I have transferred. So the right which I have transferred, I will recognize gain or loss only on this part. I will recognize gain or loss only on this part. Which part? The part, the right which we have transferred. Okay. We'll see the problem and then you will understand the numbers. In the books of buyer lessor, the buyer lessor should account for the purchase of the asset as per the applicable standard and apply the lease accounting as per this standard. So no specific calculation here, no complicated calculation here. Now the standard wants to ensure that substance over form is followed. Sometimes the sale value may be more than fair value or less than fair value. Sometimes lease rental will be more than fair value or less than fair value. So in that case, substance over form will be followed. So if the fair value of the consideration for the sale of an asset is not equal to fair value of the asset, that means I told you one example, fair value of the asset in the market is 20 lakh, but the fair value of the consideration received from the buyer is 22 lakh, or it may be or 18 lakh, 17 lakh, or the payment for the lease are not at market rates. So if either or both of these situation exist where sale value is not equal to fair value of the asset, payment for lease rentals are not at market rates, the following adjustments are required to measure the sale proceeds at fair value. Okay, the following adjustments we will make. What is that adjustment? Any below market terms should be accounted for as a prepayment of lease payment. Should be treated as a prepayment of lease payment. Now see on the screen, or I will write here only. The fair value is 20 lakh, but the sale value of the asset they are fixed at only say 15 lakh or 18 lakh or 19 lakh. So you treat as if this 5 lakh rupees is nothing but lease payment made in advance only. I give you a discount of 5 lakh. You give me a discount of 5 lakh in the lease rental. So that is treated as if this 5 lakh is a prepaid lease rental. Second possibility, fair value is 20 lakh, but the sale value they have fixed at 25 lakh. This 5 lakh extra, you treat it as additional financing. So this will be treated as additional finance. He has given you finance for the asset whose fair value is 20 lakh. Okay. Fair value of the asset is 20 lakh. He gave you 20 lakh. But he gave you 25 lakh, which means 5 lakh you treat it as if it is another loan. Okay. That 5 lakh is extra loan you can treat. The above market term should be accounted for as an additional financing provided by the buyer lessor to the seller lessee. So this will be divided into two types of financing arrangement. 20 lakh is against the asset and 5 lakh is over and above that extra loan given. Okay. Now we will solve a question. So you will pay special attention to this question, very important for understanding sale and leaseback transaction in the books of seller and buyer. And in this example, the sale value is greater than fair value. So see the question line by line. I'll go slowly. Sale and leaseback transaction, an entity, that is the seller lessee, sells a building to another entity, that is the buyer lessor, for cash of rupees 2 million. Immediately before the transaction, the building is carried at 1 million. This is carrying amount, this is sale value. At the same time, the seller lessee enters into a contract with buyer lessor for the right to use building for 18 years with annual payment of 1,20,000 payable at the end of each year. Is the arrangement clear? I will sell it to you for 20 lakh. I will lease it from you for 18 years and I will pay you 1,20,000 each year at the end of the year. The terms and conditions of the transaction are such that the transfer of the building by seller lessee satisfies the requirement for sale. Satisfies the requirement for sale. That means this give rise to sale. So I will have to do following things: de-recognize the asset, recognize the right of use asset, and recognize the profit on the right transferred to the buyer, and also recognize the lease liability. Accordingly, seller lessee, buyer lessor account for the transaction as sale and leaseback. Ignore any initial direct cost. Very good. What is the fair value of the building? 18 lakh. Sold for how much? 20 lakh. How much is the additional finance? 2 lakh. Because the consideration for the sale of the building is not at fair value, seller lessee and buyer lessor make adjustment to measure the sale proceeds at fair value. The amount of the excess sale price of 2 lakh, how this 2 lakh has come? 20 lakh minus 18 lakh is recognized as additional finance by buyer lessor to seller lessee. Interest rate implicit in the lease is 4.5% per annum. Present value of annual payment Now this you have to do the calculation in the exam. How much is your annual payment? 1,20,000 per annum. 18 year, 4.5%. Find out. 1 divided by 1.045. Press equal to 18 times. Press GT. Multiplied by 1,20,000. Are you getting 14,59,200? This you highlight or underline in your notes, because they will not give you this answer in the question itself. They will only say past journal entry, etc., etc. So you will have to first calculate the present value of lease payment. Now this also should be understood like this. Out of 14,59,200, which is the present value of lease payment, 2 lakh is your additional finance. 2 lakh is your additional finance. So that means the amount payable towards lease only is 1259,200. 1259,200 is towards lease and 2 lakh is towards additional finance, because it is in present value term. Is it right? So what they have done, they have given you two figures. Understand how they have done it. Out of which 2 lakhs relates to additional financing and 1259,200 relates to lease corresponding to annual payment. Now what they have done, they have divided this 2 lakh and this figure into two parts. 16,447 is the installment towards additional finance and 1,03,553 is the installment towards lease. How did they reach this magic number? Can you guess? Simply, you apportion this figure 1,20,000 in the ratio of 2 lakh is to 1259,200. Try on your calculator. 2 lakh divide by 1459,200 into 1,20,000. Are you getting? 2 lakh divided by 14,59,200. Ratio is 2 lakh is 2. So when I take a ratio, I have to take in the denominator total. Or one more way you can do it. If you are good in finance, you can find out the annuity figure. What you can find out? Annuity. Sir, how do you compute annuity? Long back when you were child, you used to do this calculation. 2 lakh divided by present value annuity factor 18 period and 4.5%. Is it right? 2 lakh divided by PV annuity factor 18 year 4.5%. If you try, you will get this answer. Just try, anybody. Are you getting 16447? Yes. Okay. That is not very much relevant right now. This figure will be required for subsequent accounting. When you will receive the payment, then 16,447 is towards additional borrowing every year. Okay. And remaining amount is towards lease payment. Okay or not? Little bit okay. Any query so far? So we'll just quickly revise. 2 lakh is the additional finance. 18 lakh is the fair value of the asset. Present value of lease payment is 1459,200, out of which 2 lakh is towards additional finance. So only towards lease is 1259,200. So highlight 1259,200 also in your answer. This is a common calculation for both parties. Okay. Now in the books of lessee, what I'll do, on the commencement date, I have to calculate the right of use asset. I have to calculate right of use asset and I have to calculate the right transferred to the buyer. So you see on the screen how much right of use asset I have retained. So revise the formula again, carrying amount into discounted lease payment divided by fair value of the asset. Okay, my carrying amount is 10 lakh. The present value of the lease payment is 1259,200 and the fair value of the asset is 18 lakh. So proportionately how much right I have retained? An asset which is worth 18 lakh, now I have to only pay 1259,200 in present value terms. So the proportionate right retained is 699,555. Check the answer. Approximately 7 lakh is what I have retained. I have not transferred only. So what I have transferred is the balance amount. Check this calculation. Is it right? I have some doubt. Right transfer to the buyer. Okay, this calculation is different. How much is that? 445. Anyway, this is not printed in your notes also. Not required also. Don't worry. What happened? Some calculation error? Okay, you just remember up to this now. We'll come back to this. Right retained we have calculated. Seller lessee recognizes only the amount of gain that relates to the rights transferred to the buyer or lessor. Now we have to learn the calculation of gain on the rights transferred to the buyer. So how do we do this calculation? Proportionately. See, total gain on the sale of the building is 8 lakh. How did you reach this 8 lakh? 8 lakh is the difference between, you can understand from this diagram for easy understanding. We have sold the asset at a fair value of 18 lakh. Will not take 20 lakh. Extra 2 lakh you just treat it as a additional loan. Carrying amount was how much? 10 lakh. So theoretically what is my gain? 8 lakh. But I will not recognize gain. I will not recognize gain on that part. I will not recognize gain on that part which I have, complete the line, retained. So therefore the first calculation gives me the gain on that part which we have retained, proportionate amount. 8 lakh is the gain, say yes, into 12,59,200 divided by 18 lakh. 12,59,200 is the present value of lease payment and 18 lakh is the fair value. So this portion I have retained out of 18 lakh. So I will only recognize proportionate profit. So take your calculator First type 8 lakh, divide by 18 lakh into 1259 200, 559645. Okay. And if you want to try the rights transfer to the buyer lessor, that also you can do proportionately. 8 lakh divided by 18 lakh into the remaining amount. 18 lakh minus 1259 200. 18 lakh is the total fair value. This is the present value of the rights retained, lease payment, present value. Or what you can do in case if you don't want to take so much hassle, there is a shortcut also. What is that shortcut? The total profit is 8 lakh minus 559645. That will automatically come to 240355. So you can write this or. Okay. If you want to understand again with the help of this diagram, gain on sale is 8 lakh. The portion of the gain related to right of use asset is 559,645. So this we will not recognize. This we will not recognize. And this portion which is related to rights transferred, this portion of the gain we will recognize. This portion of the gain we will recognize. That's it. Now see the journal entries. In journal entry, cash account debit will come. You will receive 20 lakh. Okay. This 20 lakh has following components. It is towards the building sold and it is towards additional finance. 18 lakh is towards building sold and 2 lakh is towards additional finance. So cash account debit 20 lakh. We will debit right of use asset. Okay. 699,555. In this type of arrangement, the right of use asset will be a proportion amount of the existing carrying amount that we have calculated. Building will be derecognized from the book now. And financial liability, actually we can divide into two parts. Lease liability and financial liability. So lease liability will be 1259,200 calculated in your notes, and financial liability 2 lakh, that is additional loan, and then to gain on the rights transferred which you computed just now 240,355. Cash received 20 lakh, no problem. Right of use asset, a proportion of the carrying amount in this type of problem. To building, derecognize. To financial liability, which is actually two liabilities, and to gain. What entry the buyer lessor will pass? For him the life is easy. He has bought a building from you. He will recognize at 18 lakh fair value of the building. He has given you 2 lakh rupees extra. So he will treat it as a loan given to the other party, financial asset or loan 2 lakh, and to bank account 20 lakh. All these hassles will be done in the books of lessee only. Lessor is buying an asset for 18 lakh, giving 2 lakh rupees as loan. Total outflow is 20 lakh. Okay. Now next is just some additional discussion. After the commencement date, the buyer or the lessor accounts for the lease by treating 1,03,553 of annual payment. This amount will be treated as lease payment, and remaining 16,447 will be treated as amount paid towards financial liability or financial asset. Okay. So 1,20,000, a portion towards lease payment and financial asset. Remember, both these numbers include interest also. Both these numbers include interest also. So while recording the transaction, interest portion will be recorded separately. Okay. What about the transfer of the asset which is not a sale? This will take after the break.